Hey everyone, welcome back to Corporate Decoder. Today, Schwab Investments just filed a semi-annual shareholder report, and I am seeing a few things that matter immensely. Quick note, this is not financial advice, just my take on public filings for educational purposes. Alright, so we are diving into the Schwab Equity Index Funds report. And the most interesting part for everyone probably is the financial highlights and portfolio holdings. We will break down what these numbers mean for the company and its investors. This semi-annual shareholder report covers the period from the 1st of November 2025 to the 30th of April 2026. Schwab is giving us a peek under the hood of some of their key index funds, like the Schwab S&P 500 Index Fund and the Schwab 1000 Index Fund. First off, let's look at the fund costs for a hypothetical $10,000 investment in the Schwab 1000 Index Fund. The costs for the last 6 months ended the 30th April 2026 were a mere $3. That's only 0.05% and annualized. That's pretty low. This suggests Schwab is doing a good job keeping expenses down for investors, which is always a positive sign. Now for the juicy part, the returns, looking at the Schwab 1000 Index Fund for the 10-year period, it is showing an impressive 14.89% return. The Russell 1000 Index, which is the regulatory index here, returned 15.01%, and the Schwab 1000 Index itself, a more direct comparison, saw 14.94% over that same decade. These are really solid long-term returns, showing the fund is performing right in line with its benchmarks. Even over the last year, the fund saw a 30.77% return, which is excellent performance in a strong market year. When we look at the statistics, the net assets for the Schwab 1000 Index Fund are a massive $21, $396 million. That's a testament to how much money investors have trusted Schwab with. The number of holdings is 988, excluding derivatives, meaning they hold a diversified basket of stocks, which is good risk management. The portfolio turnover rate is very low at 1%, meaning they are not actively trading in and out of stocks, which aligns with an index strategy. This often means lower trading costs and potentially better tax efficiency for shareholders. The top equity holdings reveal the giants of the market. We see companies like Apple Incorporated, Microsoft Incorporated, and Nvidia Incorporated all making major appearances. These are the powerhouse tech and consumer discretionary stocks that are driving a lot of the market's growth. It is typical to see these behemoths at the top of a broad market index fund. Let's dive into the actual portfolio holdings for the Schwab 1000 Index Fund. As of the 30th of April 2026, we see a massive allocation to common stocks, making up 99.8% of net assets. This is what you expect from an equity index fund. Look at the automobiles and components sector. About 1.9% of investments. Tesla Incorporated is a huge holding here, with over 6.2 million shares valued at over $2.3 billion. That's a significant chunk of the sector. Then we have banks, a 3.5% allocation. JPM Chase & Company is the big one here, with almost 6 million shares worth close to $1.9 billion. The capital goods sector is sitting at 6.7%. Here we see familiar names like Caterpillar Incorporated, worth over $900 million, and General Electric Company valued at over $670 million. These are the industrial giants. Consumer discretionary is a big one at 5.9%. Amazon.com Incorporated is in control here, with over 21 million shares worth over $5.7 billion. Home Depot Incorporated and Lowe's Companies Incorporated are also significant holdings in this sector. And then there is semiconductors and semiconductor equipment, a booming sector representing 16.6% of investments. Nvidia Corporation is absolutely dominating this list, with almost 54 million shares valued at over $10.7 billion. That's an enormous position. Broadcom Incorporated is also a major player here. Looking at the statement of assets and liabilities as of the 30th of April 2026, for the Schwab 1000 Index Fund, the net assets are incredibly high at over $21 billion. This shows the trust investors place in this fund. Investments in securities at value are listed at over $21 billion for unaffiliated issuers alone. Cash holdings are substantial at over $517 million. On the liabilities side, payables are relatively small compared to assets. This paints a picture of a very stable and large fund. For the period the 1st of November 2025 through the 30th of April 2026, the statement of operations shows investment income of over $103 million. Expenses are kept remarkably low at just over $1 million for investment advisor fees. This results in a net investment income of a positive $102 million. Then we look at realized and unrealized gains. The net realized gains are over $1.4 billion, which is substantial. The net change in unrealized appreciation is even bigger, over $3.9 billion. This tells us the market has been very kind to this fund during this period, with the value of its holdings increasing significantly. So this half-year period has been a strong one for the Schwab 1000 Index Fund, with nearly $1.1 billion in increased net assets from operations. When we look at the statement of changes in net assets for the current period from November 2025 to April 2026, the fund saw an increase in net assets from operations of over $1.1 billion. This is a strong performance. Distributions to shareholders for this period were about $293 million. The net transactions in fund shares show a slight decrease in shares outstanding during this period, but overall the net assets at the end of the period were over $21 billion, a healthy increase from the previous period. So what's the story here? The Schwab 1000 Index Fund is a massive, low-cost index fund that effectively tracks its benchmark. The financials show a period of strong gains, likely driven by the broader market performance, and the fund's low expense ratio means most of that growth stays with investors. The key risk, as with any index fund, is market downturns, but its diversification across 1,000 companies helps mitigate single stock risk. The story is one of stability and consistent tracking of the broader market. And the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives.